Now, what would happen if a particular income is taxable under the Act, but the condition of the relevant clause are not satisfied in the treaty? For many of you who are actually looking at this for the first time, this might be a little difficult to comprehend at this point in time. But as you go to interpret various articles, you will find the practical application of this in many cases. One of the most common example for this I can give you is, let's say there is a fee for technical services which is paid by an Indian company to a US company. Right? The payment qualifies as FTS under the Income Tax Act and therefore it is taxable in India. But when I go to the relevant clause in the India-US treaty, it says that unless and until the service make available, and of course the meaning of this make available is given in the treaty itself, even if it qualifies as an FTS, it is not going to be taxable in India, right? Now, when I apply this make available test to the payment in question, it just turns out that the payment does not satisfy this test, which means India loses its rights to tax. In such a case, what is going to happen is that the payment will not be taxable in India. Now, there are divergent views. There are some judicial rulings which say that in case this income does not satisfy the make available test, you should test it for whether it is taxable as business profit or other income. But the correct view seems to be that since the payment itself is in the nature of FTS, right, even under the treaty, but the condition which was applied to give India the right to tax is not satisfied, one should not go to these other clauses. But what would happen if it is taxable under the Act, but the relevant clause is not present in the treaty? So, for example, there is a payment in the nature of FTS which is taxable under the Act, right? But when I go to the relevant treaty, there is no FTS clause as such. In such a case, what should happen? Should we say that since the income is taxable under the Act, the income is now fully taxable, right? And who will take this stand? The stand is typically taken by the tax authorities. Or a second view, which is that you should see whether this income should be taxable under other clauses, such as business profit, other income, etc. Again, like I said, there are two views, but the better view seems to be that if the relevant clause is absent in the treaty, one should see whether the income which we are discussing can fall under business income, or if not for business income, whether it could be other income for the recipient and therefore eligible for a preferential treatment. But like I said, both these views are available depending on the treaty. You may want to apply either of them, but the better view seems to be that the taxability under other clauses should be seen to arrive at whether the income is taxable in India or not.